What's going on, guys? Bexio back, and today we got a brand new video with the Russian invasion of Ukraine actually happening. It happened late last night, and and absolutely crazy. The news is all over the place right now. No one knows really what to expect and what's really going on. Just kind of going off of what is being reported and being tweeted about, and people on social media there. So things get pretty crazy, but we can look at financial markets, the stock market, Bitcoin, all of this different kinds of stuff, see how it reacted, and kind of see what to maybe expect in the future here, near term and long term, to see what this could have as an effect on all financial markets. So first off, we just look at the S&P right here. So we can see it opened with a gap. So this was yesterday's close and opened with a gap down here. Big move down. If we go to VOO here, then you can see these lines here. Basically the same thing, but you see the giant gap down here. Completely just going through this line, this other support, longer term support here, and really seeing it being a pretty bad day, but we did kind of rebound. We came but down to 377, rebounded a bit. You can see on the side here, we got a lot of red, but things like Apple's down almost 3%. That's crazy. But even Microsoft is actually positive on the day. Palantir's positive. We can see the VIX, so market volatility, absolutely skyrocketing. Went up to 37, right now at 34. So a lot of things going on in the market, but one of the most shocking things, or things that are actually holding up pretty well, is Bitcoin. And we can see this was where it started right here, where the news broke, uh, where that Russia was invading Ukraine and everything was going crazy. This is where that broke, and we see a massive, just complete tumble here. But it ultimately stopped at 34K and bounced up here and got back above this line, 35,400, which was massive because obviously, if we just take a quick look down, we can zoom out to the daily. The quick look, I mean, 33K would have been the next line here, and it was just a lot of downward moves would have been needed to try and get something to stick and not have Bitcoin go into a free fall. But it reacted pretty good and doing very well right now, considering everything that's going on. And one of the reasons that might have happened is we see this big move down, but Bitcoin is severely shorted right now, not severely longed like it usually was for the past year, year and a half. So this move down didn't really liquidate anything. It didn't have longs and tons of longs to liquidate and to push the price down even further. So this move down, although I mean it's $5,000, it was like a 5-6% move down. It's nothing absolutely crazy, and we find the stabilized point and starting to even creep back up again. So good signs from Bitcoin, looking pretty healthy. Even the stock market having a pretty good bounce. I mean, we can see that here. It opened very low and having a good little bounce up. So we'll see how things react. But typically in war times or something crazy going on, usually the market bottoms a little bit before, or on the day like this, on the event of whatever happens. So if the war happens, or if this market shock event happens, then that's usually the bottom, and then the market just kind of continues up from there because the uncertainty's gone. There's no longer any wonder about what's going on. What's going on either way. No one wants a war, but it gets rid of uncertainty. And we can continue looking at these indexes. I mean, we see everything's red, and the Nasdaq, everything's been recovering pretty well. And for the Dow Jones to be down the most out of everything is kind of shocking, and the Nasdaq to be down the least, very shocking. But something that we all should be looking at is the oil prices. So crude oil is actually skyrocketed 7%. It is $104 per barrel. The first time since I think 2014. It was the last time we were around these prices right here, 2014. And we see this is a major problem for reactions to Russia. So when the sanctions go in, or sanctions go harder, all this different kinds of stuff, without trying to be like violent and actually really causing a war, it doesn't look like it'll have big effects on Russia because of this oil price and what Russia's already been doing. So they have like 2,000 tons of gold that they stored up, and they are a net exporter of oil. Basically, with oil prices like this, they've doubled their income from their oil, and it just gives them a lot more money to kind of finance their military and finance whatever they want to do. So oil prices like this, good for Russia because they get to make a ton more money. It's going to be bad for literally everybody else in the world because gas prices are going to soar, energy prices are going to soar, and everyone's going to be hit with this. And then on top of that, there's not much you can do for sanctions wise because people need Russia's oil. They supply like 45% of Europe with energy. So it's just a pretty crazy scenario. But talking about Russia, their stock market is actually got hit really hard, 34.5% down. That's ridiculous. Imagine like the S&P down 34% in a day. That would be absolutely insane. And it was actually much worse than this just earlier in the morning around like 3 a.m. Eastern or something. This was actually down 45%, the largest drawdown in history. Absolutely crazy stuff. So, this isn't even really good for Russia is in terms of economy. But I don't think they're really worrying about that right now. They're kind of really focusing on just invasion and doing whatever they're planning on doing. So we'll see how this all reacts. But Russia's stock market down bad. And in comparison, the U.S. stock market is actually not doing too bad. Obviously, 34% is kind of hard to beat, but 1%. The S&P's down 1%, Nasdaq 0.5%. Things are getting a little bit better, and it kind of goes towards that uncertainty's gone, and the bottom could be here, and we could see a little bit of the rally start here. And this is a chart of wars, kind of looking at the Dow Jones. I couldn't find one of the S&P. I'd rather look at that, but the same kind of concept here. Just looking at World War I and World War II, you see the period right before was literally the bottom, and the upward move and the rally started after the war was started. It got rid of the uncertainty. It pushed markets up. It's unfortunate that it works that way, but it's just uncertainty. Even in World War II, you see kind of bottoming before, even bottoming a little early, and then ultimately causing a move up and an explosion up when it was all said and done. And even comparing, shock events in the stock market. So, obviously things unexpected that happen out of nowhere that ultimately are bad all around, not only for markets, but like bad in general. We see all of these kinds of things here. And even the average of this is a 1 day drawdown of minus 1.2% and a total drawdown average of negative 5%, taking 22 days to bottom, 47 days to recover. So when you look at these numbers, it's nothing really crazy. When events that are shocks to the market, it's not really that terrible for the market once you get rid of the uncertainty, and it actually clears up pretty fast. And this also has an effect on the Fed and interest rates for them raising rates. Obviously, in times of war and stuff, the money printer gets turned on and goes to work. So adjusting rates is going to be something, the Fed is in a very tough position now to adjust rates. It would be not good for the economy, and that would be very bad to have a war going on and a devastated economy. You can't have those two. It's not a winning recipe. So the Fed's in a pretty tough spot. They're probably not going to be able to raise interest rates, or at least not do them as much as they wanted to originally, and kind of be really hawkish on this. So that's just more effects that this has on the entire market. Interest rates are affected. The Fed has to respond differently. And then markets that we see during war, it's always the times right before are the worst. It's peak fear, peak uncertainty. And once you start this event and you get the uncertainty gone, you get all those things settled, and you can start to actually look into the future, price in things, and the market can be efficient again. That's when you start getting rallies and the market just is able to do what it does. So nobody wants war. That's the last thing on everybody's mind. But in terms of the stock market, the pent up uncertainty of everything coming up was the bad part, and historically has been the bad parts and the bottoms. And then rallies happened after that. There's a saying that goes, you should buy on the sound of cannons and sell on the sound of trumpets. So, that is something to take into account of how the market works. But that's going to do it for this video. Just lots of effects on the market, on the stock market. Bitcoin actually reacting pretty good to all of this stuff. And just like we said, bottoms happen at times of peak uncertainty. Once that gets settled, then the market kind of goes back to doing its own thing. So we'll see how it all plays out. We'll see what happens and hoping for the best. But as always, don't forget to smash the like button and subscribe. We're on the road to 1,000 subscribers.